And so now I think we've just started the next bull market, the next leg up, which I think will be at least proportionate to the first leg, which was, the 250 to 1900. But that's a huge increase in the price of gold. You're talking about 6, 7 times increase. Well, if you kind of measure the move, so gold was in a bear market from 1981 until 2001. So it had a 20-year bear market where it went from 850 down to 250 approximately. Then it had another bull market where it went from 250 up to 1900. And that bull market peaked in 2011, and it really lasted just 10 years. So that was the initial breakout from the bear market. Then we pulled back and we had a consolidation where we went from 1900 down to about 1000 in 2015, then back up to 2000 in 2020. But we pretty much stayed between 1700 and 1900 for a few years. We didn't really break considerably above 2000, get to 2100 until this year. And so now I think we've just started the next bull market, the next leg up, which I think will be at least proportionate to the first leg, which was, the 250 to 1900. But that's a huge increase in the price of gold. You're talking about 6, 7 times increase from here. And, we're at 2,600 or from 2000, let's say. So a six-fold increase from 2000 is 12,000. 7 is 14,000. So kind of at a minimum, we're going up there. But I think the potential is much higher because we're just going to print so much money. We're going to have so much inflation that the dollar is going to lose so much value that you're really going to need a lot of dollars to buy gold. And, if gold can go from $20 an ounce to $2,600 an ounce, it can go from 2,600 to 26,000 or to 100,000, right? I mean, there's no limit because, again, gold's not changing. All we're doing is decreasing the value of the dollar. And they could print them, they could drop trillions of dollars out of helicopters, right? What stops them, right? So, I mean, how much is the price of gold in Zimbabwe? Anybody know? How many trillions of Zimbabwe dollars do you need to buy an ounce of gold? But, at one point, the Zimbabwe dollar and the U.S. dollar were 1-to-1.
Yeah.
I forget when, but I think that was the case for a while.
Yeah.
Yeah, well, gold is telling you that interest rates are too low. They should be higher. The Fed should be hiking, not cutting.
Right.
That's why gold is making a new record high every week. And, it's going a lot higher as the Fed continues down the wrong path. And they're talking about that inflation is gone. It's not gone at all. It's going to reemerge stronger than ever. Not that it ever disappeared. Inflation never got back down to the Fed's so-called 2% target. We're about 3% the way the government measures it, which means we're like 6% the way consumers pay it, because the real prices probably rise twice as fast as what the government will admit in the CPI. But that said, the CPI is finished going down, and now it's headed back up. We got up to 9% was the high year over year, and we've been banging around 3% for the last year or so. That's kind of like the bottom. And I think we're trending back up, and by 2025, we can easily be back up at 9% again, year over year, maybe higher. Well, I mean, you can't like gold and not like silver, really. I mean, in fact, silver at $31, $32 an ounce is an incredible bargain. I mean, historically, you can buy a lot more silver with an ounce of gold than you typically can. So silver is very cheap. In fact, even in dollars, silver was $50 in 1980. There's not that many commodities that you could buy today for, a substantial discount to what it cost in 1980. So I think silver is a good deal, and the price is going to go a lot higher. People should buy both gold and silver, that's what we've been recommending at Schiff Gold. In fact, people should as soon as this interview is over, go to the website and buy yourself some silver before the sale ends. I mean, I think we're going to blow through $50 pretty quickly, probably by next year, and then we're not going to look back. I mean, it's going to be a long way down when people look back at $50 silver. So this is a chance to get it pretty cheap. But again, it's not so much silver going up or the gold going up. It's the dollar going down. It's the euro, it's the yen, it's the pound. All of these currencies are going to lose purchasing power. So you're going to need more and more units of pretty much every fiat currency to buy the same quantity of gold or silver. Yeah, I mean, platinum is cheap. It's been cheap for a long time. I mean, there are a lot of things going on with platinum, industrial wise. But yeah, platinum is cheap. I mean, I remember for years and years and years, platinum was more expensive than gold. I mean, a platinum, platinum American Express card, that's the better card than the gold card.
There was a reason for that.
And now platinum is like $1,000 or maybe even slightly less than 1,000. It depends on when you look at it. But I remember when platinum was 1,000 and gold was 400 or 500. So platinum has gone nowhere, and gold's gone way up, and palladium too. I mean, that's another precious metal. But I think, look, all the metals are going to go up. Copper's going to go up, nickel's going to go up, right? All the industrial base metals, everything, because paper money is going to go down. But I do think, we mentioned earlier, when the emerging market economies ditch the dollar and are no longer trying to accumulate dollars by selling American stuff, they're going to accumulate stuff for themselves. And so when they stop buying treasuries and start buying cars, right, and appliances and furniture, the demand for commodities and raw materials is going to go way up. Because there's so many things that the Chinese still don't have. Americans, we have everything. We got 2 or 3 of everything. We bought so much. But when the Chinese and Indians and people in other places in Southeast Asia, Malaysia, Indonesia, Philippines, all these countries, when they start consuming more, all these prices are going way up. Well, they're obviously correlated. I mean, they're going in the same direction. It's just that normally in a bull market, you would expect the gold stocks to lead the metal, that they would anticipate higher gold prices. And so they would incorporate that into the price, into the PE multiples. But what's been interesting or unique about this bull market is that the gold mining stocks have lagged, and they constantly have to catch up. Gold will go up and make a new high, and the gold stocks will eventually go up. Gold will have a small correction. Maybe gold drops 50, $100. Gold stocks will get killed by 10%, maybe 20%. Then gold will make a new high, and gold stocks will start to come back up, and then it keeps making new high, new high, new high, and then eventually the gold stocks make a new high, and then gold has a correction, and the gold stocks get killed again. And so they're really having a hard time outperforming gold like you would expect them to do. And I think that's because nobody believes this bull market. They've been bearish the whole way. It's been climbing the mother of all walls of worry. I think that is going to change. I mean, you look at the big gold stocks like the Barrick and the Newmonts, they're trading at discounts, sharp discounts to the S&P 500. They historically traded premiums. And so they're cheap. The gold companies are priced to book. They're historically low. So there's a lot of bargain here. And I think that we're going to start to see the gold stocks coming in with some big earnings beats. Third quarter, I think this quarter, and especially Q4, which we'll get those numbers in next year. But I think we're going to see big beats. These major companies are going to be announcing increases in dividends. They're going to increase share buybacks. Then you're going to start to see some consolidation, more acquisitions. The market is eventually going to really go up. And, one of the problems that the gold stocks have had is that they've been an ironic victim of inflation. And it's ironic because you would think that they would benefit from inflation. But inflation drove up the cost of mining. But the price of gold didn't go up commensurate with that. Even though it's gone up a lot, mining costs have gone up even more. And I think that that's changing. I think you're going to see gold going up a lot more than the cost of mining it. In fact, if you look at oil today, oil's at an all-time record low priced in gold. You can get almost 40 barrels of oil for an ounce of gold. That's great for gold mining companies. And the wages now are not, running because they're not, the U.S. dollar has not been that weak. Normally you have a weak dollar relative to other currencies in a gold bull market, but we've had gold moving up with the dollar, stable to firmer. Although it's been weakening recently, it hasn't really gotten killed. The DXY is still above 100. And so you wouldn't have thought that we'd have $2,600 gold with a dollar index still above 100, but we do. But that's great for the gold mining companies because their wages are not in dollars. And so, I think they're going to really start to make up for, the lost ground. And Wall Street is completely off guard. Nobody really is following this sector. In fact, earlier this year, back in February, March, several of the brokerage firms downgraded Newmont, downgraded Barrick to basically sells when gold was just about 2,000. And those stocks hit multi-year lows. Earlier this year, you had multi-year lows in the largest gold mining companies. I mean, I took advantage of that. I was buying more myself, even though I already owned a lot. I couldn't, help it. I had to buy more because I wasn't going to, let that gift, just go away. And I was pounding the table on my podcast back then, telling people you got to buy these stocks when Wall Street is giving them away because they're basically capitulating. And I remember when they downgraded, was it Barrick? The analyst said, "I'm downgrading it because I don't see any upside potential in gold. Gold's at 2,000. It's fully priced. It's not going to go up. So why buy a gold stock when gold can't go up?" And of course, then gold had its best year probably since that guy's been alive. Well, it's been relatively steady for the last few years. No big increase. I mean, we did get a spike in business during COVID. 2020 was a very good year for physical gold. But we haven't seen any kind of pickup this year, even though the price of gold is having its best year in 45 years. The last time gold had a year this good was 1979. Yet despite that, the phones are not ringing off the hook. I mean, it's business as usual. And I know when you look around the industry, gold ETFs have seen net liquidations this year.
Yep.
So the public has actually been selling into the rally the entire time. I know even the ETFs for the gold mining stocks, like a GDX or GDXJ, have had net liquidations during this year. Normally, the public is encouraged to buy when the prices are going up, but not this time. They've been selling the whole way. And to me, that's just a very bullish indicator that the little guy isn't even participating yet, that the main buyers are foreign central banks who are a lot smarter than retail investors in the U.S. and probably individual investors maybe in China or India, some of the BRIC nations, they're a little bit more astute over there. And so they're probably buying some metal. But I think that, by next year, you're going to see the U.S. buyer, European buyers coming back into the market. And I think you're going to see the institutions, who haven't really been in the market, pension funds, the endowments, the big money hasn't even looked at gold probably since the 80s. And so I think they're going to come back. I mean, I think it's going to be reintroduced into portfolios as a diversifier, as an inflation hedge. It's going to fulfill the role that U.S. Treasuries have been fulfilling, because people have looked at Treasuries as a kind of a safe haven, risk-free way to park some money. Well, Treasuries are extremely risky. The government's going to hold the yield well below the rate of inflation, so anybody who holds Treasuries is guaranteed to lose. And so I think Treasuries are not going to be suitable for portfolios. So what are you going to buy as an alternative, as a low risk store value safe haven? I think gold is going to be what ends up replacing Treasuries.